So in this video, I'm going to be talking to you about, I'm going to be revealing how do you navigate the maze of banking. And I will explain what I mean by a maze, because banking is a maze. And one of the challenges that you would face is going to be how to find the right banker at the right level who can give you the money to finance a deal, loan you the money to finance a deal. And just to give you a perspective, I have met over 80 plus bankers in 26 banks, and I have reached out to thousands of bankers. Okay, and I've spoken to the cream of 80 bankers in various divisions of the bank. I have met HSBC, Citibank, Credit Suisse, Barclays, all of the major global banks that have offices in UAE. I've also met a Chinese bank that is a very big bank that's based in UAE, and I have met all of the local banks in the UAE. And one of the largest banks has 30,000 employees. 30,000. And most of them call themselves bankers. So when you say I was just on the call with a banker, you're talking about someone who is among these 30,000 people. And how do you navigate who the right decision maker is out of these 30,000 people? It's kind of like a stadium full of people. That's how big a banking infrastructure is. And to find the right division, the right banker in that division at the right seniority level, who has a signing authority or who has the power to make a decision or make something happen towards financing your business, is absolutely and crucially important. The business case itself becomes a secondary issue. I'm making a very bold statement here, because if you're not talking at the right level of the bank, even if the business is good, you may get rejected because you're not speaking with the right banker or right level of bank, a bank who can attend to your request and your proposal in a favorable manner. Okay, and UAE is a very small region, and still it has got 30,000 people within one bank. So that's what this whole series is going to be about. It's going to absolutely blow your mind and change the way you look at banking forever. So stick till the end, and your mind will just get blown away by how complex this is, and hopefully I can clear up a lot of the complexity of dealing with banks. By the way, this is an episode 3 of a multi-part series. So if you haven't watched episode 1 and 2, I highly recommend watching it. Otherwise, this episode is not going to make any sense. So this is a multi-part series. This is episode 3. We'll call it The Maze of Banking, or decoding or exposing the maze of banking. And also I have a big announcement to make. That is, I have opened up the group mentorship program that will take place over 6 to 12 months. The registrations are open. If you're interested in learning how to buy multi-million-dollar businesses which are in your city, and use banks' money to buy a business and take a major ownership in a multi-million-dollar business and buy several multi-million-dollar businesses. If you want to understand the process step by step, I am structuring a mentorship program. I was offering one-on-one. Now I'm offering group, which is going to take place over 6 to 12 months, and it is priced less than the one-on-one. So if you could not afford the one-on-one, you could sign up for the group. If you're interested, message me and we will get on a free consultation call, and we will discuss if this is the right opportunity for you. We'll look into your situation. Most likely you would be meeting me one-on-one, and we will look into your situation and see if it's a right fit and move forward to signing you up for this program. If you're serious, if you're interested in learning how to acquire multi-million-dollar businesses, if you want to be in a position to do that. So let me know. Let's get right into it. The maze of banking. So you got 30,000 employees in one of the largest banks in UAE, and how do you find the right banker? Okay. So I'm going to share with you various divisions of a bank. And if you understand the divisions, and if you understand how many segments there are, then you can navigate it very, very effectively. So I have found there to be around 5 divisions, and each bank has different policies, and each bank is structured in a different way internally, the way they operate. Just like every company operates in a different way, they have different divisions. Just like that, a bank, each bank is kind of like separate, but each bank has a version of this structure that I'm sharing with you. The divisions may be called something else, but most of the banks have this structure, and they have different names for this structure. But ultimately, it's divided into these structures which I'm going to share with you. So let's divide the bank into 2 segments: personal loan and business loan. Okay? And I'll talk about the business in a second. The personal loan is what most people go to. And also within these 2 segments, there is a front side and a back side. Let's call it that. Okay? So one area of banking is depositing money, where you give them the money. Okay? That is depositing. And this is the banking I was exposed to since childhood. My mother would tell me go to a bank, which would really mean a bank where you deposit money. That's where most people go. Then there is the lending side, where you go asking for money and they need something in return. Okay, that's lending. There is personal lending and there is business lending. Let's talk about personal. Most people go for a personal loan, whether they want to buy a house, education loan, car loan, gold loan, a small loan for a purpose backed by gold or silver or whatever. All of that comes under personal loan. When we talk about achieving hyper growth through acquisitions, you're not dealing with this kind of financing. So most people have banking relationships in this area. And in fact, a very large portion of the bank is structured around catering to this audience, because that's where most people go. And this is the banking most people are familiar with. They're depositing money and asking for small loans. And by small, I mean a couple of 100,000 is a small, very, very small for a bank. You got to look at it from the banking perspective. So that's the personal side of the equation. And this is where most people go. And this is not the side that you go when you want to buy $1 million company or a $10 million company or a $100 million company. Okay? And most of these 30,000 employees will be to cater this. By the way, your credit card also falls under this. And this is known as retail banking, small amounts. Okay? Leave that aside. Let's go to business. Within business, you have got small to medium sized enterprises. Okay, small businesses basically. Then you've got medium sized businesses. In some banks, these are known as commercial loans. Okay, commercial banking. And then you've got corporate banking. And then you've got the large corporate and investment banking. And you also have wholesale banking. Okay, so you've got 5-6 divisions. And each bank has a version of these divisions. Okay, and I'm going to talk a little more about these divisions and what's each of their purpose, etc. In some banks, this is known as small corporate, mid corporate, and large corporate, and mega corporate. Okay, so these are just names that each bank can have separately. All right, but in some banks, I've noticed they call it SME, small to medium sized enterprises, mid corporate, large corporate. In some banks, I have seen they call it small corporate, medium corporate, large corporate. It doesn't matter the name, but the idea and the principle is that these divisions are divided by the size of the ticket. Whatever amount of money you want to borrow, based on the size, the bank refers you to that particular division. Okay. So one criteria is the size. The second is the type of loan. Okay. Let's look into this a little more deeply. Okay, we're going into deep into rabbit hole. Pay attention. I don't want to lose you. Pay attention and see. So the type of loan, there are two types of loans in business. One is asset based. So when the bank gives you money, it wants something, right? Most of us are familiar with real estate loans, where they give you money and you give up the house or something, right? So that's a real estate loan. You give house as a collateral, or something physical as a collateral, which is typically an asset. That's known as financing. You're getting money in exchange for an asset. That is asset-based funding. Another type of funding is cash flow based, where they want access to cash flows. So your credit cards, you don't give any physical object to get a credit card, right? They usually look at your salary. They have access to how much you make every month, and based on that, they decide what your credit limit is, and they give you a credit line, right? That's a credit card. So that is cash flow based, and this is asset based. When we go looking for acquisition financing to buy a business, we are, in most cases, we are not looking for asset based. We're not looking to give physical object. We are looking for cash flow based, because the strength of a business, a service business like healthcare, it's really cash flow, because most of these companies don't have real estate involved. They have a couple of doctors, and they're working and they're producing money, like they're producing liquid cash. So some of the banks and some of the divisions within the bank deal with asset-based lending, and some of them deal with cash flow-based lending. Okay, so now you have a further lens to navigate the situation. Some banks favor assets. They want to gobble up assets, take people's houses, and some banks like cash flow. They want to put their hooks in the cash flow and get access to that. Okay, so these are two types of loans: asset-based and cash flow-based. Okay, and these are divisions, and these divisions are divided by ticket sizes. So small to medium, I would say, would be $1 to $5 million, $1 to $7 million, $1 to $9 million. Bank to bank, it's different. Medium would be 10 to 20, 10 to 30 type. And large would be, it's not really large, but it would be anywhere between $50 to $100 million or beyond. And then you've got the investment bank, something like Goldman Sachs, which deal with investment banking. If you want to make an investment, you're taking a loan to make an investment. There are sophisticated investors that use debt to make investments along with their own money, and they acquire large chunks of large businesses. And this investment banking deals with a lot of things. They also take companies public. So you've got the Goldman Sachs, JP Morgan, almost every large bank has an investment banking division. This is probably the most sophisticated divisions within a bank. You've got high profile bankers. You've got, they look like Gordon Gekko from Wall Street. They're wearing like pinstripe shirts and, cufflinks and all kinds of shit. I've met them in Barclays, Citibank, not Citibank, in Barclays and Credit Suisse. I met their investment banking division, because that's the offices in UAE. They have the investment banking. And the minimum ticket starts at $50 million. And they call it, that's a small deal for us. They want a deal where they can generate advisory fees of a couple of $100,000 just to offer advice on the transaction. That's investment banking. That's the sexy part of the bank. Anyway, so we'll talk about the SME, mid and large. So typically you will deal with SME or commercial or mid corporate. This is anywhere between 1 to 10 million and 10 to 20 million, 10 to 30 million. And this is where you will narrow down if you want funding. Now, in your region, in your city, in your state, these may be called differently, but these are structured around sizes. So in this division, you will have junior bankers. And in this division, you'll have a little bit of a senior banker who has worked in the bank 10, 15, 20 years, right? And in the investment banking, you'll have the most qualified, high performers. You know, the Ivy League guys are going to be here, like the top tier bankers, very sophisticated. They are positioned, and based on the quality of a banker, the bank decides who gets to be in what division, okay? And each of these divisions have heads. Each of these divisions may have a separate credit committee, or they may have a common credit committee. And this gets even more complex. That's why it's known as a maze of banking. I'm calling it a maze of banking for a reason. And city to city, each bank branch may have all of these functions in every city. So a place like India or UAE, Dubai may have an office. Let's say UAE, Dubai may have an office, Abu Dhabi may have an office, and all of these offices have all of these divisions, and all of them are separate bankers. That's one possible structure. Another structure is everything is interconnected and all the 5 divisions are in one place. That also happens. But this is a complex. Just to find the right division and the right bank is a task. That's what I'm really trying to communicate here. But if you do a lot of calls, you can find the right banker, you can interview several bankers. And I've sat down with bankers on the phone understanding all of this. There are ex-bankers who left the bank who told me how it's structured from inside. And the decision makers within these divisions keep changing. So not only it's a maze, it keeps moving. You know, the power keeps moving. The members of the credit committee who take the decision on the loans, they keep changing. The bankers keep switching banks, they keep changing. And everything is dynamic and moving. So that's why when you call a banker, he says, we can't finance your deal because we are an asset-based lender. Second time you call, that bank's policies have changed. Now they are cash flow based. Because all of this is interlinked with the economy. I mean, you can really feel that you're in the eye of a hurricane, because everything that happens in a country, the first type of institution to take a hit is a bank. And they have to be on top of everything. They have to keep changing their policies, they have to keep changing their people, they have to keep restructuring. And they have to make loans fast, and they have to make it efficient, and it's a very complex structure. And a lot of the people say, oh, finding a deal is the hardest thing. I would say navigating through the banks at the right level is probably the hardest thing. And we're just beginning to scratch the surface, by the way. Now we have identified the divisions within the bank. We know where to go. We know asset-based, cash flow-based. You have some of the banks who are very large in size have further divisions. So it may have a real estate division where a banker who has knowledge about real estate, only he is looking at the deals of real estate, and you have many bankers like this who are only trained to look at real estate deals, and that's a real estate division of the bank. So if you call them up, you set up a meeting, you have to say, I want a real estate loan for business purposes. They guide you to the real estate division. You have got petrochemicals, oil and gas. That's a separate division of the bank. You've got, some of the banks have healthcare division. Well, there is a reason why they have these industries. They're very profitable, and a lot of activity goes on in these industries. So they have set up separate divisions where you have people who are specialized to look at these deals. You have experts in these industries. And so they are trained to look at these deals and assess whether it's a valuable opportunity or not. So you got to make sure that you deal with the right level of people, because sometimes the banker doesn't know that this is not something that I can look at, and he doesn't guide you at the right level. And he may just say, we don't do this. I have had where I approached a bank with a deal and I say, I want acquisition financing. And he says, we don't do that. Our bank doesn't do it. That's what he said. But what he meant was that my division doesn't do it. There is another division who does it. But of course, that other division is in a different part of the town that he hasn't been to. It's in a different office because remember, it's 30,000 people working. And this person said, no, our whole bank doesn't do it. And when I speak to another banker in the same bank, who's from a more senior division, he says, we do that. So a banker said no to you, and you may think, oh, it's a no. The whole bank has said no. But just to put things in perspective, you've got 30,000 people in this thing. You've got multiple divisions. And these divisions, they're so busy on their own, they don't meet each other often. Sometimes they have a marathon or a big event where everybody comes together. But, typically, everybody's separate. Not everybody, but these divisions are separate, in separate locations. Some of them are in separate buildings. Some of them are in separate floors. You get the point. So, and there are people who don't know each other, even within the bank. There are types of lending that happens, that the bank does, the types of services the bank gives that the bankers themselves do not know. The junior bankers, the seniors know. And then finally you've got the wholesale banking where where one bank lends to the other bank, or bank borrows from government, and those are very big divisions. We don't go to them. Those are usually 500 million, 700 million, $1 billion loans. That's wholesale banking. Okay. It's also known as institutional banking. So this is the lending side, personal versus business. I'm just summarizing. Personal versus business. Within business, you've got small, medium, large, and investment banking. All of them are divided up with different ticket sizes. And you've got asset-based, which is physical asset. And then you've got cash flow-based lending. And then you've got also industry-specific divisions. That's just a division. Let's talk about the banker itself. So in each division, you've got seniority of a banker. Some of them will be members of the credit committee. Some of them will not be the members of the credit committee. Okay, some of them will just take your case, prepare a presentation and present it to the credit committee. Okay. And so you've got people who are known as relationship managers. A lot of the banks, they're known as relationship managers. Then you've got senior relationship manager, you've got vice president, you've got senior vice president, and you've got head of the department, corporate. And you have to understand how many of these are involved in the decision-making process, and can you get everybody on the phone or on the call to present your deal. And the more the senior, the better. Because, and if he's the one who's involved in the decision-making process, then it's easier. And you may not understand what their decision-making process is, because they may say it's the credit committee who decides, but the credit committee may have 2 or 3 people. Sometimes they come on the call, sometimes they don't come on the call. They send a junior banker to understand the case and present it, and they keep a distance between the client and the decision maker, so that there is no funky influence that can happen. And sometimes they don't tell you who is the one who's going to take the decision. You're one representative of the bank who understands the case, and this person may be qualified, may not be qualified to look at acquisition financing. So there are a series of complications, and this banker has to understand the case, sort out the information, and then present it in the right manner to the credit committee. And then the credit committee either approves or rejects the proposal. Sometimes the powerful members of the credit committee, you don't know that you may be dealing with them, are the decision makers. And you're dealing with a senior banker who can actually has influence with the credit committee, and he can get the job done. Once again, every single bank internally is structured differently. Their decision-making structure also changes, and the people in power also changes. So it's a moving target, and you have to inquire, investigate, talk to a lot of bankers to understand what their system is like, and then you got to penetrate. Once you find a banker, once you have the financing, once he has moved his ass and actually delivered some result, then you know he's a legitimate banker. And then you can put that particular banker in your cream funnel, where all the cream contacts are. And once you build a relationship at the right level, once you finance it, then you know who to talk to and what the process is like. But one of the superstars in the communities that I'm connected with, he spoke to around 200 bankers and he met physically and he understood all of this. And I met over 80 plus bankers, because in UAE you have only 26 banks. So I spoke to the 80 top highest level bankers and understood what the process is like. And this is the information that I got. I'm sharing it with you just to have an idea what the process of fundraising with a bank is like this is when you find a deal. So this is why it's important that before you find the deal, you do this process and you penetrate the banks in the right manner and get connection at the right level and understand what, where to talk to. And again, we haven't yet talked about how to present the business case, what are the financial metrics, the deal itself. We haven't looked at that. This is just establishing contact with these guys. That's how complex and intricate this is. And it's a good thing, because most people are not going to go through this and they'll give up. And people who manage to get at those levels, at top levels of banking, and manage to make connections there, gain tremendous amounts of power and leverage and access. And most people don't even get to go to SME or mid-corporate or large corporate. Forget about investment banking. Very few people. The higher the echelon of the division and the higher the echelon of the bank, the fewer people have gone in those rooms and fewer people have made contact. And by the way, the divisions of the bank becomes smaller and smaller as the ticket size increases, because fewer and fewer people get more and more qualified and the power becomes, extremely concentrated at the big levels. And I have met several bankers at that level. I've met a banker whose minimum ticket size he would finance would be $100 million. And I asked him, I said I had a deal, $3.5 million. I said, this is a deal, what can you do? And he says, we do acquisition financing, but this is very small. I said, what would be your ideal ticket size? He hesitated, gave me a pause, looked in my eyes and said, $100 million. We can talk about it. And I was like, oopsie doopsie. And I was like, oh. So I made a contact with someone that can finance a big target and is looking and is interested, and came on the call with me and spent 30-40 minutes with me and will talk to me, and I have his personal number. I just have to find a deal of that size and work on it and present it in the right manner, and wow, things open up speaking to bankers that you didn't think were possible. I went into looking for 3.5 million and this guy is saying, we've got more. Do you have a deal of that size? A good deal? Maybe we can look at it. We are open to looking at it. And that's the power and that's the magic of dealing with the banks and going through this process. Is you discover things that most people can only dream about. You make connections that most people don't have, and it's because you made the phone call, and it's because you went through this process. And most people don't want to do this process. Most people don't want to deal with debt. Okay, let me start again. Most people don't want to get into business. They get into business, they want to open a restaurant, small restaurant. They don't want to do a big business. Then few people want to do big business. And then fewer people want to deal with debt. And even a fewer people will go through this process and even understand and comprehend this process. So if you look at, as I was mentioning in one of the videos, the bigger the risk and the more complexity, the less the competition. Because most people don't understand this, and then they don't put themselves through this, and they will never get to these top tier bankers who can make things happen. And that's today's video, Decoding the Maze of Banking. And I'll talk to you soon.